work for? Why doesn't your Majesty strike them dead?
Papa, don't get excited. It's bad for you.
Now listen, you are young. Your lives are before you. You've got to fight. Fight for yourselves. Fight for our people. Mama, I have to cheat the tax collector before my own children. Do you think I want to do that? I live honestly. I trade honestly. I want to be honest with them. But they won't let us. We are Jews, taxed to death, forbidden to learn a trade, forbidden to own land. They keep us in chains. They send men here to rob us. So work and strive for money. Money is power. Money is the only weapon that the Jew has to defend himself with. Oh, mother!
Come, he wants to speak with you. All of you.
Why start a bank? Starting a bank offers the potential for significant benefits to local communities, investors, and bankers. The community. Local banks are noted as being more responsive to community needs and providing better service to banking clients. They are the principal lenders to small businesses nationwide. The investment. New banks can be attractive investments. Upon maturity, they offer the potential for capital appreciation and dividend income to investors. The opportunity. New banks provide bankers and bank directors personal growth opportunities while giving back to and supporting local communities. Developing a plan. The first step in organizing a new bank is to build a strong business and strategic plan. The plan must consider the proposed business of the new bank, its financial and managerial resources and prospects for success, the convenience and needs of the public, and the effect on competition. A strong business and strategic plan supported by detailed financial projections and appropriate policies and procedures form the basis of successful regulatory applications for a bank charter. It underpins the expressed intentions of the bank in raising organization capital. And it guides the activities of the bank for several years following the opening of the institution. Encompassing market analysis, business lines enumeration, resource allocations and constraints, and safety and soundness considerations, the plan forms the keystone of the organizing plan. Building the team. The strength of the management team and board of directors is perhaps the most important factor in starting a bank and effectively providing for its future success. To be approved for a new bank charter, the senior management team must be experienced bankers with a history of relevant success in the bank's proposed strategy. The board of directors should include individuals with successful careers in a mix of business, banking, and other fields, and have representation in the necessary disciplines for the board to meet its responsibilities. The role of the board and management as investors is important. Regulators and other investors will look to the investment of the directors and senior officers as an important sign of their commitment to the bank. Applying for a bank charter. Starting a bank involves a long organization process and permission from several regulatory authorities. Extensive information about the organizers, the business plan, senior management team, finances, capital adequacy, risk management infrastructure, and other relevant factors must be provided to the appropriate authorities. The proposed bank must first receive approval for a federal or state banking charter. Before granting a charter, the chartering regulator must determine that the applicant bank has a reasonable chance for success and will operate in a safe and sound manner. Next, the proposed bank must obtain approval for deposit insurance from the Federal Deposit Insurance Corporation. Additional approvals are required from the Federal Reserve if, at formation, a holding company would control the new bank or a state-chartered bank would become a member of the Federal Reserve. Raising the capital. Once successful in the regulatory process, new banks must raise their initial capital from investors before they can open. As a consultant, investor and in its capacity as a licensed broker-dealer, Carpenter has assisted organizers in raising billions of dollars in initial capital. All insured banks must comply with the capital adequacy guidelines of their primary federal regulator. The guidelines require a bank to demonstrate that it will have enough capital to support its risk profile, operations, and future growth, even in the event of unexpected losses. Newly established banks are generally subject to additional criteria that remain in place until the bank's operations become well established and profitable. We believe organizers should plan for effective minimum capital of $15 million to $25 million. Successful capital generation in these amounts is generally the result of a well-formulated and executed plan for developing local and other investors in the bank. Get started. Successfully starting a new bank is a significant project with important critical steps to be completed, and most organizers choose to seek outside counsel and expertise in pursuing their plans. Carpenter's new bank program, developed over decades in hundreds of successful bank startups, provides a complete framework for successful execution. Identifying the market need and creating the strategic plan, building the right team, drafting effective regulatory applications, and raising the capital necessary to open the institution.
The strategy. Whether bankers use an existing bank as a platform or establish a new bank, our approach is the same. We seek to source capital and provide expertise in regulatory sponsorship in an effort to establish and build strong, valuable banks. The impact. Properly designed community bank investments can serve social goals while lowering risk and enhancing return. Between 2012 and 2015, for example, one of our banks made over $150 million in loans invested for the development of solar projects, filling a critical market niche in smaller and mid-size commercial solar development. Our investment of $39 million in equity capital helped make this lending possible. For an investor seeking a positive environmental impact, this represented $3.85 of impact lending for every $1 of invested equity. Another bank in our portfolio has made over $200 million in loans to businesses operating in LMI areas. For investors interested in supporting economic activity in these underserved areas, this represented over $2 in impact funding for every $1 in invested equity. Certain investors are interested in supporting economic activity in their own state or region. Our historic investors here included Los Angeles-based pension funds, for example. Their total investment of $25 million in equity helped support over $180 million in lending to businesses and consumers in the city of Los Angeles. Impact investing through community banks can offer an effective and promising approach to balancing return objectives and social goals. ALM Advisory and Review Services. Effectively managing today's balance sheet demands evaluating a myriad of alternatives in order to create competitive advantages for your business development teams. Our services are designed to uncover opportunities. Whether assessing your existing ALM framework or systems as part of our interest rate risk review process, or participating in your ALCO meetings, we are committed to helping you mitigate risk and build value. ALM and interest rate risk reviews, back testing, and model validations, liquidity reviews, credit stress testing, model validation, ALLL review and model validation, customized financial management reviews, modeling validations, and board of director executive management training, strategic planning. In starting hundreds of banks, investing in banks, and advising client banks, Carpenter has worked with management teams to create effective, actionable strategic and business plans. In our experience, achieving asset and earnings growth in banking is primarily the product of better business execution, good management and culture, speedy issue resolution, a focused business development plan, and effective review and communications processes to measure results and maintain strategic alignment. Our strategic and business planning process begins with these fundamentals and expands to reflect the specific situation and opportunities of each bank. Risk management. To effectively manage risk, banks must centralize certain aspects of planning and oversight of certain key functions, and to complete comprehensive consolidated risk management assessments. Our work in risk management is informed by our own experience as a bank holding company, responsible for the results at our invested banks. The work of compliance and audit functions, asset quality, and a portfolio-wide view of liquidity, spread, and investment policy are comprehensively captured in reports and evaluations that inform and guide the board and management. Regulatory consulting. Assisting with regulatory relationships and board-level compliance issues has been a core activity of Carpenter for many years. As a regulated entity operating under the oversight of the Federal Reserve, we approach regulatory relationships with an owner's perspective. Regulators are partners with specific needs and objectives. Banks and bankers that approach their regulators with that approach will fare well, regardless of short-term issues that arise.
My sons, when I go, I leave you in your mama's care. She is wise, far wiser than I, and good. Do always as she says, and you will grow rich. Come closer. Much money is lost through sending gold by coach from one country to another. In times of war, it is seized by the enemy. In times of peace, by thieves. You are 5 brothers. I want you each to start a banking business in a different country. One to go and open a house in Paris, one in Vienna, one in London. choose the most important centers, so that when money is to be sent from here to London, let us say, you won't have to risk life and gold. Hampshire, here in Frankfurt, will just send a letter to Nathan in London saying, pay so-and-so. And that will be offset by loans from London to Frankfurt. Understand?
Yes, my brother.
In your day, there will be many wars in Europe. And nations that have money to transport will come to the Rothschilds because it will be safe.
Papa, you mustn't talk anymore. The doctor...
I'm giving advice to our sons, Mama, that the doctor cannot give. Remember, unity is strength. All your lives you must stand by one another. No one brother must be allowed to fail while another brother succeeds. Your 5 banking houses may cover Europe, but you will be one firm, one family, the Rothschilds, who work always together. That will be your power. And when that power comes, remember the ghetto.
I shall be here. I shall never leave the house where they were all born.
And remember this before all, that neither business, nor power, nor all the gold in Europe will bring you happiness till we, our people, have equality, respect, dignity, to trade with dignity, to live with dignity, to walk the world with dignity.